Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the sometimes confusing world of corporate filings. This week we're diving into a document that shows a company raising some serious cash, and I mean almost $3.5 million worth of cash. Get ready because this is going to be an interesting one. Also, if you are new here and love getting these corporate breakdowns simplified, hit that subscribe button and join our Discord community linked in the description below. We're looking at Annovis Bio Incorporated, their latest report, and it is all about a big financial move they've made. Think of it like this: they're selling off more of their company's ownership, called shares, to people who want to invest in them. This is usually done to get money for their business plans, and in this case, those plans are quite specific. So what exactly happened on the 26th of October 2025, Annovis Bio Incorporated, or as we'll call them, the company, made a deal. They agreed to sell a bunch of their common stock shares. This wasn't just a small sale, it was a registered direct offering. That means they told the government ahead of time they were going to do this and how it would work. They're selling over 597,000 shares to specific buyers, but that is not all. They also made separate deals called stock subscription agreements with two people who are on the company's board of directors. These are executives who help run the company. They're buying almost another million shares. So when you add it all up, they're issuing a grand total of over 1.6 million shares. Now, the price for each of these shares is $2.05. So if you do the math, the company expects to bring in about $3.425 million from this sale. That is a good chunk of change. But keep in mind, they still have to pay for some costs associated with making this sale happen. So what are they going to do with all this money? They have a pretty clear plan. A big part of it is to keep developing their main drug compound called buntanetap. They're planning a phase 3 study, which is a very important stage of testing for Alzheimer's disease. The rest of the money will be used for general business operations and to keep the company running smoothly. Now, anytime a company sells shares like this, they usually bring in someone to help them find buyers. In this case, they hired a placement agent. Think of them as the matchmaker for this deal. The company agreed to pay this agent a fee of 7.0% of the money raised, except for the shares bought by the directors and executives. They also have to cover some of the agent's expenses. And there is more. The company is also giving the placement agent warrants to buy more shares in the future. These warrants are for almost 83,500 shares. They're like a ticket to buy shares at a set price in the future, and this particular ticket is valid for 5 years. The price for these future shares is $2.5625. This is a common practice to incentivize the placement agent. Along with all these agreements, the company is also filing legal opinions from their lawyers. These opinions are essentially saying that all these shares and these warrants are being issued legally and are valid. This is important for any investor to know that everything is above board. And of course, to wrap up the filing, there is a list of all the documents being submitted with this report. It is like an appendix showing all the contracts and legal paperwork we've touched upon. It includes details about the securities purchase agreement, the stock subscription agreements, and those placement agent warrants we talked about. Now let's talk about what this all means for Annovis Bio Incorporated. On the surface, this is a positive sign. Raising almost $3.5 million is significant, especially when it is earmarked for a critical and potentially very impactful area like Alzheimer's disease research. This shows the company is serious about pushing their main drug forward and has a clear strategy for how to fund it. However, we also have to look at the other side of the coin. Selling more shares, while it brings in cash, also dilutes the ownership of existing shareholders. This means each existing share represents a smaller piece of the company. The price of $2.05 per S-share also gives us a glimpse into how the market values the company at this moment. It is not uncommon for companies in the biotech space, especially those heavily invested in research and development, to rely on such offerings. One of the biggest risks for a company like Annovis Bio Incorporated is the success of their clinical trials. Developing drugs is a long, expensive, and unpredictable process. A failure in a phase 3 study could have a devastating impact on the company's stock price and its future. The reliance on a single compound, buntanetap, also presents a concentration risk. On the flip side, a breakthrough with buntanetap could be a massive win, creating significant value for the company and its investors. The fact that they are dedicating these funds to further development suggests a strong belief in the drug's potential. The involvement of board members in the offering is also worth noting. It signals their personal commitment and confidence in the company's future. Ultimately, Annovis Bio Incorporated is in a high-stakes game. They're betting big on their research, and this capital raise is a crucial step in that gamble. It is a company that investors interested in the pharmaceutical sector and disease research might want to keep an eye on, but with the understanding that there are significant risks involved. Alright, that is our breakdown of Annovis Bio Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think investing in a company focused on Alzheimer's research is a smart move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.